Hey everyone, welcome back. Ready to tackle another deep dive?
Always ready.
Awesome. So today we're going to try and demystify the world of life insurance.
Ah, yes, life insurance.
Oh,
Essential, but can definitely be a head scratcher.
it can be, yeah. We got a ton of research on term versus whole life insurance,
Yeah.
and listeners have been asking for this one. So let's see if we can break it down. You ready?
Absolutely. Let's dive in.
All right. So first things first, life insurance, at its core, it's about protecting the people you care about.
Right.
Financially, I mean, if something happens to you.
Yeah, that's the heart of it, providing a safety net for your loved ones, making sure they're okay financially if you're not around.
Right. And there are different ways to do that. Term life insurance, that's kind of like the straightforward option, right?
In a way, yeah. Term life is like, think of it like renting an apartment. You're covered for a specific period of time. Could be 10 years, 20, 30. Depends on what you choose.
Okay, I like that analogy. So it's temporary peace of mind, basically.
Exactly. And that's why it's often good fit for, let's say, young families or people with a mortgage. It covers those crucial years when you have big financial responsibilities.
Makes sense. But then what happens after the term is up?
Well, the coverage ends. Simple as that. If you outlive the policy, no payout.
Ah, so that's why it tends to be more affordable, right?
Yeah, exactly. You're not paying for lifelong coverage, just for that specific period you choose.
Okay, I'm starting to get the picture. Now, whole life insurance,
Mm-hmm.
that's the one that people find a little more complicated.
Maybe, but it's actually pretty interesting. Whole life is, well, it's in the name. It's meant to cover you for your entire life, no matter how long you live.
Okay, that makes sense. So bigger commitment.
Yeah,
And it's more expensive, I assume.
it is, yeah. Because it's not just about the death benefit. Whole life insurance, it also builds cash value over time.
Oh, right, the cash value thing. That's the part that always trips me up. So how does that work exactly?
Well, a portion of your premium, what you pay for the insurance, it goes toward the death benefit, like with term life. But with whole life, another portion gets invested. And that's where the cash value comes in. It grows over time, kind of like a savings account.
So it's like a double duty insurance policy?
Kinda, yeah.
Yeah.
It's protection A&D, a way to build wealth. And you know what's cool? The cash value grows tax deferred, so you don't have to pay taxes on those gains until you withdraw the money.
Oh, interesting. That's a nice perk.
Yeah, it can be a really attractive feature for some people.
I can see that. So with whole life, you can actually tap into that cash value if you need to, right? Like for a loan or something.
You got it. You can borrow against the cash value or even make withdrawals.
So it kind of becomes this, I don't know, multi-purpose financial tool.
Exactly. It's not just about what happens when you pass away. It can play a role in your overall financial plan. Some people use it for like estate planning purposes or even to supplement their retirement income.
Right. It's a lot more than just a death benefit. But I mean, I've heard some people say that, well, the investment returns with whole life insurance aren't always that great. Like you could potentially earn more if you invested that money directly in the stock market. What do you think about that?
That's true. It can be a more conservative approach to investing compared to, going all in on stocks. But for some folks, that's actually a plus. They like the guaranteed growth, the stability. It's about finding what aligns with your risk tolerance and your goals.
Okay, that makes sense. So term life affordable, straightforward, temporary. Whole lifelong coverage, cash value component, more expensive. Now, I read that some people actually use both.
They do, yeah. And it can be a really effective strategy depending on someone's situation.
So how would that work like in real life?
Yeah. Imagine this, okay. You're in your 30s, you've got kids, a mortgage, the whole 9 yards. You could get a term life policy to cover those responsibilities, for the next 20 years or so. And at the same time, you could have a smaller whole life policy to start building that cash value for the long haul, think retirement or whatever you might need down the road.
So you're kind of hedging your bets, getting the benefits of both.
Yep. Covering those immediate needs and setting yourself up for the future.
Sounds pretty comprehensive.
Yeah.
But I guess, wouldn't that also mean you're paying more overall? Like with two policies instead of one?
Yeah, you definitely have to factor in your budget. It's about finding a balance, making sure you have enough coverage without stretching yourself too thin.
Right, right. So to wrap this all up, term life, it's a great option if you need affordable coverage for a specific period of time. And whole life, it's more of a long-term strategy, offering lifelong protection and that cash value component. And then there's the combo approach, mixing and matching to fit your needs.
Exactly. Lots of options to consider.
This has been super helpful. I feel like I'm actually starting to understand this stuff now.
Glad to hear it.
But before we wrap up completely, Any final thoughts for our listeners out there who are, trying to navigate this whole life insurance landscape?
Here's something to think about, and it ties into some of the trends we're seeing these days. With more people going freelance, working in the gig economy, having less predictable incomes, how might that change the way we think about life insurance in the future?
Hmm. That is a really interesting question.
It is something to ponder as you make these decisions.
Absolutely. And I think it's a great reminder that there's no one-size-fits-all answer. What works for one person might not work for another.
Exactly.
So yeah, definitely do your research, talk to a financial advisor, figure out what's right for you. And thanks for joining us for another deep dive. See you next time.
See you then.